Hello traders, Corey Mitchell at TradeThatSwing.com. This is your swing trading stock market outlook for the week of October 20th. This is going to be pretty brief since not much is looking great to me at the moment, so I will be mostly sitting on the sidelines. The exception may be the gold, the metals sector, which continues to do okay. We did have a sell-off on Friday, so the current watch list not really being updated. I may run the occasional scan on metal related stocks, but for the most part, I use these times to take a bit of time off. Swing trading is very periods of action followed by periods of inaction, and I've learned to enjoy that bit of time off when the market gives us a bit of a break, when it's between transitioning, or it may get better again, or it may start to decline, in which case maybe some short trades come into play. Best swing trading stocks list, I will be updating that one. That's just a list of really strong stocks, really weak stocks, maybe some still in there of interest. That'll get updated in the next day or so. I updated it on October 5th or 6th, I believe. Some longer term ones, I'll get to updating those too, because that'll become important. Again, I'm not forecasting anything. I just look at current conditions, and that determines how I trade. If we do start to sell off, these lists become much more important, because then I start to look at these ones that these are longer term trades, not so much swing trading, but ones that, great companies that are really strong financially, growing their earnings, and if I can buy those at a discount, then that's great. So I'll start checking out those lists. Let's just look at the price action for a second. This is the NASDAQ, this is the S&P, this is the Russell 2000, NASDAQ Composite Canadian Index. You can see all of them still in uptrends. That's getting threatened a little bit, I guess. If we continued to sell off, we'd be starting to make lower lows, lower highs, and most of these holding up somewhat okay. Bitcoin, these boxes just kind of show like it was ranging, it broke below, then we build back up into the box, then we have a move up, then we had another little range, and then we were ranging here, we broke below it, we had this spike up, and you can see like we're not really holding this area anymore. We've broken below it. So if we did get moves back up into here and we started to see some bullish price action, that could be a potential long. Still keeping in mind there's a range, so if it stalled out near the top of that range, I would get, if it starts rolling over again to the downside, I'd be getting out. If it were to break out and hold, this one broke out, didn't hold, that'd be how I'd trade that. If this starts holding near these lows and rolls over to the downside, that could indicate a bigger decline. Gold miners, still doing good, but you can see a pretty big spell off there on Friday. Same with gold. This is the gold ETF. Really sharp rise. Pretty nice sell off there on Friday. But overall, still an uptrend. This remains an area of strength. And I'm always kind of waiting for the price to push up. So most of the gold stocks from Friday would have dropped off, so they would need to move up to hit any of my triggers. I mostly trade patterns, rounded bottoms, triangles, those sorts of things. They have to get up. They have to move back above some sort of level within that pattern to trigger a trade. If the prices keep dropping, I don't get into any trades. If the prices start going up, then could potentially get into some trades. But capital allocation is going to be fairly low overall, just because the conditions kind of change. You can see I turned it green. We'll look at the market. These are based on market health indicators. This is pretty much when everything was green and bullish, and we had a shift recently where market health indicators turned not so good. So let's look at that. Volume, not really important to me at the moment. This is percentage movement. You can see uptrends correlated generally with lower movement. This bottom line is important. This is a minus 2% down day. And throughout that rise, we didn't have any 2% down days until, I believe it was October 10th, big 2.7% down day. That immediately backs me off. It's uncharacteristic of uptrending behavior. This is... let me just move that for a second. and that's just a rate of change, a 1-day rate of change indicator. This is the advanced decline line based on the NYSE. Advancing stocks minus declining stocks is a cumulative number, and you can see it's actually holding up pretty well. I kept that one as a smiley face because we're still pretty much up near the highs. S&P is not too far off its highs either. I didn't make any lower swing lows. It's still kind of showing more, still kind of moving up. At least it's not moving down. This is up volume divided by total volume. There's been nothing in here. This is just looking for extremes in buying volume or selling volume, just as a percentage of how it works. Is up volume is, let's say it's a 90% reading. That would mean 90% of the volume that occurred that day occurred in stocks moving to the upside. That would be an extreme. Doesn't mean a reversal extreme. It just means that is a large amount of buying interest coming in. That is generally favorable. If that reading was 10%, that would be not good, because only 10% of the volume that occurred that day occurred in stocks moving to the upside. You can think of it the flip side, then 90% of the volume was in stocks moving to the downside. That would be not good. We haven't had any of those signals. We got very close here on that big down day, but it was just above the threshold, so it doesn't matter. So we're just looking for those extreme readings. This is neutral. We haven't had any extreme readings, which would help, show us really where a lot of volume and stuff is coming in for stocks moving up or down. An extremely biased day, I guess you could say. Percentage of stocks above their 50-day moving average, we are below 50%. 42% of all U.S. stocks and 44% of S&P 500 stocks are above their 50-day moving average. It is generally much easier to make money on the long side when most stocks are moving up and we are above the 50 line. What I'm doing right now, gold stocks, maybe some trades there. Bitcoin sitting out. Anything else in stocks, I'm just day trading. Day trading I get to do every day. I like it. Take advantage of the movement up or down. Whereas swing trading, it's more when conditions are really good, I'm going long. If it's kind of uncertain, like it is right now, I stay out. When it gets really bad, I may look at some short trades. So have a great week out there. That's your weekly outlook.